Obviously, September, right, pretty much where we are right now is where gold finds traction and takes off into October. And the daily chart is like teed up perfectly for this. It's just had like a 2 week pause. It's faded into the 20-day moving average, which naturally acts as support. Seasonality wise, for some reason, everybody wants to buy it right now this time of year and wants to drive it up. So, I mean, I like gold. Gold should rally potentially, into the end of the year, obviously not in a straight line, but I'm expecting in the next 2 weeks, we should hit 2,700, or at least in December, once this upward whole trend seasonality wise has moved in. So everything is pointing to 2,700 roughly.
Over the past decade, gold has seen significant price fluctuations. In the early 2010s, gold prices were relatively high, peaking at approximately $1,900 per ounce in September 2011. This surge was fueled by the aftermath of the global financial crisis, which prompted investors to turn to gold as a safe haven amid economic uncertainty and inflation fears. Internationally recognized technical analyst and founder of Technical Traders Limited, Chris Vermeulen, predicts that gold will begin a rally heading into October, despite some market hesitation. He notes that gold has remained steady and foresees an imminent surge towards the $2,700 range, potentially within the coming weeks. Currently, precious metals are priced at around $2,530 per ounce, marking a 53% increase in less than 2 years. During times of equity market stress, gold has outperformed all other asset classes, delivering higher historical compounded returns than treasuries. Chris explains that the $2,700 level aligns with a long-term measured move, reflecting a 20-year cycle. He suggests that when gold reaches this point, it may coincide with the stock market nearing its peak. As of December 2023, U.S. stocks had an average 10-year return rate of 12.75%, compared to gold's return rate of 4.57%. However, Chris believes this correlation could reverse in the near future. He emphasizes that we are at a pivotal moment, with major cycles influencing the precious metals market. He highlights a recent three-wave correction in silver, viewing it as a setup for a potential rally. Silver's role in modern industry is crucial, especially given the unprecedented demand across various sectors and a supply deficit that shows no signs of easing. The case for silver is stronger than ever. It is essential to the future of global industry, and there is no way to produce more of it. Now, let's dive into clips from Chris Vermeulen's recent interview. Before we continue, please subscribe to our channel and hit the bell icon for timely updates.
It is super bullish. I mean, this is like gold is primed and ready. It's already rallying. It's bullish on pretty much every chart time frame right now. So I mean, yeah, no one can complain. It looks really good. The daily chart, when we drop to it, has had a beautiful little pause. It's been trading sideways towards the 20-day moving average. There's been some weakness and some fear in the market, which has kind of muted gold a little bit, but it hasn't like fallen. It's just paused. And I think we're about to see it start to move higher again and have another leg up. And, I think 2,650, 2,700 is just, any day, any week here, it's going to pop and rally there. And once it gets there, that's a big measured move. You and I have talked about it before.
Right.
It's
Right.
like a 20-year cycle measured move. It's this bullish, just this over this year also points there, a longer term. So there's multiple time frames that point to 2,700 or so, is kind of right dab in the middle. And once it reaches that, I do think the stock market will probably have topped or very close to top. And I don't think gold will go a whole lot higher until I think we have a financial reset. And this is something you and I have been talking about for really a couple of years, as this, when we look at gold here on the monthly chart, we've been in this multi-year consolidation. And, this measured move just based on this low and this rally and this pullback is still telling us 2,700. And this is going back, we started to map this out somewhere over here in 2023, saying 2027 is the next major measured move. And if we were to take that from this high to this low, it also gives us the same one. That's like a 24-year pattern that plays out. So it's going to be really interesting. We hit that level, how gold reacts at that point. And I think it'll be a turning point, not just for gold, but it'll be a turning point for the economy, a lot of assets. I think things always have a weird way of lining up, right? And they all happen together. I mean, I think we're in a time with the major cycles at play, and major bull market cycle, I think, coming to an end, a stage 3 top, the economy about to go for a downswing. Everything is coming together for precious metals to be in this sweet spot. Gold naturally holds up generally almost always better and wants to go higher in this window. Silver should follow suit. Now, this beautiful run up and this kind of 3-wave correction is a very good sign. It's actually this little 3-wave correction right here that breaks this low that spooks a lot of people out. We can see there was a lot of fear and people bailed out of the play. And now it's trying to stabilize and build a launch pad and a base to start the next run, because technically, this is we can use Fibonacci measured move where we would draw these lines, and it points us to $34 to $36 an ounce, fairly conservative for silver. So silver, I mean, it needs that rocket ship to get sparked to take off. And it's a more not a conservative, it's a more aggressive play. That fear in the markets will pull it down. It's not quite the same global safe haven play as gold, which is why it's more volatile. And it's a tiny market. But overall, I mean, it's like trading silver to me is like a junior microcap stock, it's just totally different than gold. Gold is like a big, large cap, a big moving beast that's stable. And then silver is the microcap of them. And once it starts to run, it's going to be pretty good. It's bounced off the 50-day here. And I think this multi-wave correction is enough to shake things up, confuse people. And if it can find traction and break that and close above 30, I think we're off to the races to 34 or 36.
During the interview, Chris Vermeulen shared that while the mining sector may continue to face some challenges, he remains optimistic about a short-term rally in gold, silver, and miners. He predicts that GDX, the VanEck Gold Miners ETF, could potentially rise into the low 50s if there's a strong push in the precious metals market. Currently, GDX is up 24% year-to-date, fueled by rising gold prices driven by geopolitical tensions, central bank buying, and falling interest rates. This surge in gold prices offers a potential boost to gold miners, improving their profitability, making GDX an attractive opportunity for investors looking to capitalize on the precious metals market. However, Chris also cautions about a possible temporary struggle and foresees a potential market correction that could pull GDX back down. He highlights that seasonal trends suggest strong buying interest around this time of year. Now, let's get back to the interview.
I think the miner space is still going to have a lot of struggles. I do think gold, silver, and miners here, I think we could see GDX maybe push up to 45, maybe squeeze like up into the low 50s if we get one more final like real kick, real push in the precious metals space. But overall, I mean, we had this major top, and then really it went into this major bottoming formation where it carved out a bottom forever. We started to see some big bouts of buying where investors moved in, and those, that busted through, and now it's faded down into that base, and now it's starting to come to life. As you pointed out, it's breaking through this falling trend line, and it is showing signs of life, that it wants to go higher. So I like it. I mean, we're long GDX, and I think we've got some upside potential here. And I think it's short-lived. It's a trade. I believe if we go through a market correction, I think GDX will be right back down where it is or lower. And then you re-enter it once, we go through a stage 4 decline, a reset, and then it'll be a big opportunity after that. So the whole precious metal space I'm bullish on over the next couple of weeks, couple of months, depending how long the market wants to drag this out. But it's not to me, it's not a long-term buy here.
Gold provides a vital layer of diversification to an investment portfolio due to its historical tendency to move inversely with other asset classes. In other words, when investments like stocks and bonds underperform, gold often shines. How do you see the evolving trends in gold and silver influencing your investment strategy in the months ahead? Share your thoughts in the comments below. If you found this video helpful, be sure to support our channel and turn on notifications so you never miss our latest updates. See you in the next video.